A creditor committee set up by Ghana's external lenders, Ofori Club, is expected to hold talks this week on the country's request for debt restructuring. China is expected to attend the meeting, which will reach an agreement on how to restructure about $22 billion out of $30 billion owed. There's more in the following NewsDesk report.
Ghana owes big, 576 billion cedis. Its external debt stands at almost $31 billion, and the country aims to restructure about $22 billion. That's to say, Ghana wants to delay payment of most of these debts and possibly secure haircuts on interests. But the creditors, the so-called Paris Club, must agree to this. At the World Bank IMF spring meetings in Washington, D.C., Finance Minister Ofori-Atta said there was reason for optimism.
On the roadmap to an IMF board approval and beyond, in relation to the fund program, on the government side, we have made significant progress and have completed all prior actions agreed to move the fund. Additionally, the Paris Club has met and continues to meet to discuss the delivery of financing assurances. Based on our engagements, we expect these financing assurances to come in the next couple of weeks, thereby enabling Ghana's program to be presented to the IMF board for approval soon after that. Today's webcast was to engage our investors for their support for Ghana's program supported by the fund. We've also met with our development partners on the need to safeguard growth and private investments into Ghana.
China, which initially raised issues and sought clarity, is also said to be on board.
As you know, we visited on March 22nd, we had excellent meetings with the finance minister, in which he was very clear that these were short-term problems that Ghana was seeing. He was very confident about our future in the medium and long term, and committed that they would work on our case to be able to give the appropriate assurances.
The Paris Club set up what it called a partial creditor committee to discuss Ghana's indebtedness and the requests for debt restructuring. This week, the committee is expected to deliberate on many issues, including assurances to be given to the board of the IMF, but no one knows what the outcome of such a meeting will be. Is the reason Mr. Ofori-Atta is urging caution.
I think one has to be, really cautious about that. Obviously, you have heard Crystalina, Managing Director of the fund, talking with a lot of sort of a positive air.
3 key hurdles must be scaled to secure a $3 billion loan, a domestic debt exchange program done, an external debt restructuring pending, and then an IMF board approval also pending. 1 out of 2 so far. For now, only further talks will continue in the quest for an economic salvation.
Information Minister Kojo Nkrumah is hopeful the Paris Club will provide the necessary assurance to the IMF to enable the fund take a decision on Ghana soon.
Those outside the Paris Club, China, India, Saudi, have also given us very positive sentiments, and I've also given those very positive sentiments to the fund. Okay. It is all of that we expect to come together in the coming set of weeks so that those financing assurances can be issued by the external sovereign creditors, and the fund, having received those assurances, can then proceed to the board.
The finance minister says pension funds will not be added to the domestic debt exchange program. Speaking at the final wrap-up press conference held by the finance minister, Dr. Ofori-Atta, Ms. Ofori-Atta touched on the commitment from U.S. companies to invest in Ghana.
And what we know and that we are doing is that there were some outstanding instruments to work on. And that really was the cocoa base from Cocoa Board, and also the government of Ghana US denominated local bonds, and the IPP debts. Those are just, I would say, continuing work that has been going on since the DEP was closed. And those will continue until we get to an accommodation that makes sense for both parties. I think there was also discussions about the pension funds, which were excluded. We did indicate the last time about the MOU that we had signed with them, and we should be clear that in the MOU we agreed to pursue mutually beneficial options within the debt sustainability limits, as we continue with them. So those discussions continue to be going on, and we are engaging them. So I'm not sure what the interpretation of that to mean in the second round of DDEP.